What's going on, everybody? Cullen Gandy here. Welcome to my channel, and today I want to mix it up and talk about a topic that I am personally passionate about, and that is cryptocurrency and blockchain technology. I have a little bit of a history going back to 2016-17 when I first dipped my toe into the crypto space. And I think many of you at home, if you're looking through your finances, you might have heard about it and you're thinking, well, is this really for me? Is this something that I think is going to be beneficial in the long run? Well, I'm going to give you my unique perspective on this and a little bit of a background as to why or why not this might be useful for you in the future, or something that you might be interested in investing in, because it is and it can be a pretty volatile investment. Just to preface this, I am not a financial advisor, so please don't just go out and buy certain investments just because I say that I'm interested in them or that I think that they're going to be profitable. Just going to advise you there. Now, cryptocurrency, and specifically Bitcoin and Ethereum, which are the two largest cryptocurrencies, have history dating all the way back to the beginning of this last decade, that is to say 2010, 2011, 2013, all the way up till now. What is cryptocurrency and what is blockchain technology? Well, this kind of dates back to a reaction in the financial space for this need for people to have independence and anonymity when it comes to their transactions. And yes, this does have history in things like illicit trade of different substances that you could get over the dark web, but also this could just be a good way for people to transact on any number of different items, things like journalists trying to reach out anonymously to certain sources and transact on things is really quite useful for that. And that is because cryptocurrency and blockchain technology at a larger scale is a way for people to individually and anonymously send and receive and verify a transaction that is listed on a public, what's called ledger or blockchain. First of all, I'm going to give you what a rundown of cryptocurrency actually is. Cryptocurrency is basically a unique piece of code, right? That it encapsulates a certain value for people. And the one thing that makes it really special and really unique is that, one, it can be transacted anonymously over a publicly established and decentralized ledger. So you can send this from one person to the other, and that transaction is logged forever in a chain of events called a blockchain. And two, it is immutable. Now, what does that mean? Well, cryptocurrency cannot be copied or falsified or duplicated, right? So that one individual piece of cryptocurrency, that code that encapsulates that, is completely unique and unduplicatable. So this makes it a really valuable asset when you're trying to verify something of value. And there's been two major bull runs. That is to say that the value of these two specific coins and all of the alternate coins has gone way up in value two separate times over the last decade. So there's one time it went up in 2017, and now we are currently experiencing a pretty large bull run, maybe the end stages of a second bull run during this 11-year period. This ties into the blockchain idea that there is an Internet of Things, that all things have a unique identifier about them in the blockchain, and they can all be established in a blockchain without being duplicatable, so that everybody knows who the owner of a certain piece of furniture, if you're looking to just establish the ownership of certain item, right? That can be used in the blockchain, but also currency, right? What if you could give somebody $1 and have everyone else in the world know that that person received $1 and the dollar, actually belongs to them? Well, that's essentially what cryptocurrency and blockchain technology does. The cool thing about all of this is that this can happen between two anonymous parties. And it can be verified by everybody in the entire internet that is hooked into the blockchain or the nodes. A node is a terminal or a computer or somebody who is hooked up to the blockchain who is accessing the information on the blockchain. And as a result, they also participate in the verification of all the transactions on the blockchain. If everybody who is hooked up to the blockchain, to this particular blockchain, knows that an item is being transacted through this network from one node to another one, then this can be an instantaneous transaction. Why? Because the entire internet of things, in this case, or the entire ledger on the blockchain is established immediately, right? So if you have two wallets, and this is something you're going to hear about, one wallet has a unique identifier, the other one has one, and when one sends one thing to the other, it's established immediately on all of the nodes, or all of the terminals and computers on the blockchain, and subsequently, that is verified by all of those, making it a part of the new blockchain, or the part of the new chain of events in that Internet of Things. Cryptographic currency, or cryptocurrency, is received by a process called mining. And yes, that sounds exactly kind of what you would think about when you think about mining. You know, in the old days, they would mine coal, they would take a pickaxe, they would go down and they would just beat the crap out of a mountain until they could get some coal. Well, it's kind of like that, except it's all on the internet. It's all on the blockchain. There's three things you need to know here that are associated with mining. One, that is the block. Now, that is the entire length or period of time that it takes to mine out a certain number of cryptocurrencies before that block is changed over to the next phase. Then there is what's called the hash rate. And that is just a measure of computational power that it takes to mine the cryptocurrencies, and we'll come back to that. And then finally, there is the method of mining, and there are two, right? There is the proof of work and the proof of stake model of mining cryptocurrencies. One, the proof of work model is much more utilized right now, and then the second, proof of stake, is more theoretical, and we're sort of breaking into with each passing year. So when you mine proof of work protocol, what you're really doing is having a bunch of computers on the blockchain or in the internet solving really immensely difficult mathematical equations in order to be rewarded by cryptocurrency. In fact, the computers and the algorithms that solve these equations are all solving what's called cryptographic problems. That's why it's called a cryptographic currency, because we're solving cryptographs in order to receive currency. And in the olden days, you could just do this like on your laptop, right? Because the cryptographs that they were solving were very easy, and you would receive a lot of cryptocurrency in return. I mean, like thousands of Bitcoin, which would be worth millions of dollars. But as each block progresses of the period of mining, so too do the algorithms and the computers need to become more advanced, because the problems in the cryptographs that they have to solve are exponentially more difficult. This is why you're seeing a lot of news about how much energy, in fact, an incredible amount of energy, it takes to mine Bitcoin, because people are buying up all of these GPUs and ASIC units, these computers that are specialized in order to mine cryptocurrency. But they need more and more advanced computers every year, because the problems get harder every year. Also, there are a lot more people, so the process gets a lot slower for everybody, the more amount of people. So if you don't have the best technology and access to really cheap electricity, it can become really fraught, and you might be mining a lot less, exponentially less cryptocurrency than you did in the olden days, like in 2011. That's where the word or the function of the hash rate comes into play. If you have processing power that increases your hash rate, or the power or the computational power that you have access to in order to solve more of a portion of these problems to get more of these cryptocurrency rewards back, then you're going to have an advantage. So the hash rate is simply just how much power, how much muscle you have, how much hardware you have when you're swinging that pickaxe, right? The digital pickaxe. That's essentially what the hash rate is, and that's why technology is so important when it comes to Bitcoin, Ethereum, and all of the other alternate coins that you may have heard of, like Dogecoin, which had a big run, earlier on last year, and things like Monero and other things that you might not have heard of yet. Proof of stake mining is where you all have an initial amount of tokens on a blockchain, right? You all have an initial contingent of cryptocurrency, and you each, everybody who is a terminal or a node on the blockchain that is, spread out through the entire internet, puts up their amount of cryptocurrency in return for mining a certain amount back. So once you say, it's like playing a poker game. Here's my chips, except everybody who puts out chips gets back chips when the final block is sort of mined out, right? So it's proof of stake. What the aim of proof of stake types of mining protocols is to essentially save a lot more energy than it would take to do the proof of work and solve manually with GPUs and ASIC units and other kind of CPU mining. All of the energy that goes into that could be avoided if it was a consensus thing. And that's what proof of stake is. Basically, everybody sees that they've staked a certain amount of cryptocurrency. Each individual node signs off on that stake. And so it's verified simultaneously on each individual computer on the block. And then cryptocurrency is assigned. No sort of extra electricity needed. This is very expertly metered out with the Ethereum network, and I encourage you to sort of look into what Ethereum is and how it works. Basically, they are in the process now of switching over into a completely proof of stake, ecosphere for that cryptocurrency, and that is going to change the game of cryptocurrency mining forever, because we aren't going to see these big, huge price tags with getting back a lot of this cryptocurrency that we are currently seeing now. If you want to learn a little bit more about that network, you can check out Vitalik Buterin's social media platforms. He's pretty active. I think he's in his early 20s. It's a really interesting guy. And his Ethereum network, I think, is going to represent a lot of the progression of where blockchain technology, as it sort of responds to cryptocurrency, I think that's where a lot of this is going to go. Now that I've given you a very basic, we're talking about real basic breakdown of what cryptocurrency is and how the blockchain technology around it works, I want to talk about what it means to invest in Bitcoin and Ethereum and all cryptocurrencies, and what it will mean going into the future, because it can be a very, like I said, very volatile, very uncertain future for this technology. In fact, recently I think I've had some stories pop up where it's like El Salvador is like gonna adopt Bitcoin now, and now it's like the currency there. And if you start a cryptocurrency company in El Salvador, you won't have to pay any taxes on it, no property taxes. Pretty sweet deal if you want to move to El Salvador. But not only that, a lot of Fortune 500 companies like PayPal are going to be using blockchain technology and cryptocurrencies themselves in order to be able to exact more and more instantaneous transactions, especially with financial technology or fintech ideas surrounding things like Ripple or Cardano, which are specifically suited toward the banking industry. Here's my experience with investing in cryptocurrency. Way back 2016-17, I was hooked on cryptocurrency, and I bought, we're talking, Ethereum was like $9 at the time. So I bought a ton of Ethereum. I bought a ton of Bitcoin, and I just sat on it forever. So confident was I in the role, the future role, I guess, of cryptocurrency, that I just thought I would be a shaker and mover, and I created a Python program that traded certain cryptocurrencies against other ones, kind of like a Forex trading platform. And I roped all of my family and all my friends to sort of invest in it. Now, short story long, the cryptocurrency had a down period because come to find out, over each consecutive block, the price relative to the dollar of a cryptocurrency, specifically like Bitcoin, it goes up, goes back down. And in this case, in 2017, early 2018, the price of Bitcoin went from $19,000 all the way back down. I think at the lowest it was at like $3,500. And all of my initial investors didn't feel too confident in the investment at that point. Had to liquidate my whole position, which was a bummer. And that was that. And I was thinking maybe I was wrong. Maybe my faith was misplaced in the technology and in the cryptocurrency space in general. But On reflection, especially with the second bull run we've had, it seems a little bit like a little bit of a short-sighted kind of point of view that I had that led me to sort of scrap all of my interest in crypto and blockchain. And that is because if you are investing in cryptocurrency, if you're buying cryptocurrency, you have to think of it in the frame of what its actual intended use is, right? If you are investing in cryptocurrency because you think that its value relative to the dollar or regular what's called fiat currency or government money is going to go up, then you may have a good time, you might probably have a real bad time. However, when you take a look at this technology and you see how it can revolutionize certain industries and how it can streamline so many different kinds of transactions with business to business and business to client, you have to think of it in the frame of probabilities. This is what sparked me on buying back more of my Ethereum position, buying back more of my Bitcoin position, because these are the questions that you have to ask yourself if you're somebody that thinks that they might want to sort of include a little bit more crypto in their portfolio. So 1, do you believe that the role of government is going to become more stable over time or less? For me, looking at world events, I just sort of feel like perhaps, from a sheer observational standpoint, yeah, maybe things are getting a little bit less stable over time. 2, do you believe that technology is going to comprise more of the economy or less? Well, for me, this was a no-brainer. Obviously, I believe that technology is going to sort of reach out its tentacles into almost every facet if it hasn't already. And with this type of instantaneous transaction possibility on blockchain, I mean, it's just going to make it that much more functional, that much easier. And then 3, do you believe that the need for an anonymous transaction between two parties is more or less valuable over time? Well, I mean, given the state of things in places like China and even here in the United States, where credit is very, very, strictly observed by several bureaus. I mean, 3 bureaus sort of hold credit over everybody's head. And in China, in fact, the government, has their own credit or social credit system that makes it very difficult for people to do anything without observation, without verification. I believe that this is something that is going to prove very valuable for the future. And then the last thing I had to ask myself was, do I believe that it's going to become easier over time to trade cryptocurrency for goods and services that are actually useful in the modern economy? Because right now, the price of Bitcoin relative to government money changes several percent, if not tens of percent per day. And it's very hard to nail down a certain price. Also, the fees associated with sending Bitcoin from one wallet to another wallet are so prohibitively large. I think sometimes they're like 1% for the sender and 1% for the receiver. So if you want to buy an apple, first of all, you got to think, oh gosh, it's a $1 apple, I'll send you this much Bitcoin. But all of a sudden the price of Bitcoin dropped and now you haven't given them enough money. And also they've had to pay 2% on the, the money that you've just sent them, and it gets there initially. And so it's a kind of a headache. But I do believe that the fungibility or tradability for other goods and services is going to become more easy over time as technology progresses on the blockchain. We've already seen this with things like Litecoin, which is a token or a similar cryptocurrency as Bitcoin. However, they have sort of retrofitted it so that it transacts more quickly and takes up less space, so there's less of a fee structure around that. So yes, I do believe that it's going to become more fungible over time, and as a result, more valuable as an investment, as a currency. Bottom line is, if you're considering investing in cryptocurrency, think about it as you're investing in getting money, right? You're getting in on money before money was a thing. So if you had an option to sort of get in on the dollar before it was a reserve currency, or get in on the idea of money prior to it having existed, like in a barter economy, would you jump in? For me, it seems like a pretty easy answer. I'm totally going to do it. Let me know what you think in the comments below. One way that can lead you down a really bad path is if you think you're going to, speculate on it Yeah, you can make a lot of money, but you can also lose a lot of money because there's the volatility of the investment, and also there's a bunch of skeezy snake oil salesmen in this space too. I mean, there's one in every economy. There's always going to be that contingent of the crowd that make their own Bitcoin or they make their own type of cryptocurrency and they try to sell it to you. So what are the drawbacks of cryptocurrency investment or just having cryptocurrency in general? Well, in the case of Bitcoin, which is the most valuable cryptocurrency on the market, there is a cap. It's sort of coded in, and they're trying to get around it by doing different things like separating or forking the blockchain so that you can create more of it. But there's a cap on the amount of Bitcoin that there ever will be. And then after that last block is mined, there will be no more Bitcoin that are created, right? So this is very important because this means that essentially most people are getting these Bitcoins and then holding on to them, which is sort of counterintuitive to what you want to do with a currency, right? Currency, by the very definition, means you want it coming back and forth and flowing around. It's currency, right? So this problem is effectively making Bitcoin more of what's called a store of value. And that means that the price of Bitcoin is going to go higher and higher and higher and higher over time. And it's going to make it less and less and less fungible for other goods and services unless something changes, and it forks several more times. And then secondarily, this also means that Bitcoin is essentially going to end up being what's called a deflationary asset. And it's going to be so capped, it's going to be so high that essentially it's never going to be transacted from one person to another because nobody wants to lose out on the amount of money that it's going to, that it's going to cost to let go of the Bitcoin in fear that it's going to become more expensive. It has essentially got an end date attached to it. And so once it reaches that end date, I believe that it could eventually deflate as it reacts to the economy not really being able to interact with it very well. However, guys, I think that cryptocurrency overall is a really revolutionary aspect of the economy, especially in financial tech sectors. I believe that the Ethereum network and Bitcoin and Bitcoin Cash and all that stuff is really, really revolutionary and has so many applications. And I do believe that the problems are, exponentially more outweighed by the benefits and how exciting the technology will be. So for me, yeah, I'm going in on the crypto space once again, spending most of my money that is allotted for investing on that. It is pretty risky, but again, I have the mindset where, if it goes down 40%, no big deal. If it goes up, no big deal, right? You want to be in on the big idea before the big idea becomes giant. That being said, everybody, I hope you found something in this video that gave you some value, or maybe you could just use a little bit of the ideas from this video to bother your friends at parties. I don't know, but I do want to bring you everything that I can bring you when it comes to finance, mortgage finance, personal finance, or anything to get you down the road to where you want to be financially. And again, hopefully see you down that road a little bit happier and a little bit richer. Take care, guys.